Today, traders are digesting the outcome of yesterday's Fed meeting, and the U.S. Central Bank held interest rates steady as broadly expected. At the same time, Fed officials signaled support for another rate hike this year. Market participants dubbed such a decision a hawkish pause in the regulators' tightening campaign. Given a hawkish tone in a policymaker's comments, investors are expressing concern about economic prospects. With the high interest rates, energy demand is unlikely to increase. Nevertheless, oil prices are still near multi-month peaks. Supported by oil output cuts by Saudi Arabia and Russia, U.S. inventories of crude oil continue to decline, and the U.S. Department of Energy reported another weekly drawdown in stockpiles. Thus, the forecast suggesting a substantial market deficit in the fourth quarter remains relevant. According to the trading chart, the market took advantage of the Fed's hawkish pause to take the asset away from the overbought territory. Brent crude oil futures fell below the $93 mark, indicating an increase in the volume of short positions. If the price stays firm below 92.5, the benchmark will extend losses as a part of a correction. However, market imbalances will be fixed only after the price dips below $90 per barrel. Then the asset will most likely resume its rally toward $100 per barrel. After all, the uptrend remains intact. Gold prices jumped almost to $1,950 per ounce before the Fed's meeting, but then plunged below $1,930 on the signs of a further monetary policy tightening. Nevertheless, downward pressure from the U.S. Central Bank has somewhat decreased due to a slight softening in its rhetoric. Thus, the yellow metal is now unlikely to fall below $1,900 per ounce in the short term. If the price fixes below the $1,920 mark, a downtrend will continue. Otherwise, the metal may get stuck in a sideways range before resuming a gradual recovery. Meanwhile, the Russian currency continues to trade at around 96 rubles per dollar. And as expected, the outcome of the Fed's meeting has gone unnoticed. Apparently, the market situation will not change in the near future. For now, at least, there are no signs of a trend change. The stock market is edging down, albeit slowly. It's still coming under pressure from a persistently high interest rates. Therefore, there is a likelihood that the index will shortly fall below the 3,000 mark. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.